Good evening, everybody. It's September 5th, 2011, Sunday night, and actually September 4th, sorry. Yeah, I just wanted to do a market video. Haven't done one since November 2010, I believe. I believe we're at an important point right now, and I think we're about to make another leg down. I wanted to go over some charts that make me think that. And here we go. We start off with the SPY. As you see here, it looks like we had here, I'll use the mouse pointer here. I haven't done this in a while. As you see here, back in the middle of July, we were at 134.82, and then we dropped to 110.27 within a couple weeks. Pretty big drop in a short period of time. Then we've been chopping around here. We made a higher low and we made a higher high, but it looks like we're forming this formation right here. Looks like it's a bear flag. You had the death cross of the which is the red line crossing below the green. That's the 50 below the 200. The other line that I have tracked here is the 18-day. As you see here, we the last couple days. Well, we had the big run up last week on this is the Bernanke day. Right here where my pointer is, and we rallied from about 113 and change on the SPY to 123.51 in about 5 sessions, which is a very intense low volume rally, and then we sold off. We finished the week at 117.85, so we gave up about half the gains in 2 days. As you see here on the histogram, it's right here, MACD histogram. You see the bars get higher here, and then you have a bar that comes down. So that's confirming that there's the momentum to the upside has stopped, and now you have downside momentum. So that is good if you're in the bear camp. You're below all the moving averages except for the 18-day moving average, and I believe it's below that on the SPX, which is the futures contract for the S&P 500. You have the MACD below the zero. So if you have a cross, typically if you have a cross when it's below zero, it's more powerful. So that would make sense with this making another leg down, which I think is going to happen. You have the stochastic is turned down. It was overbought. It's still overbought. It's 71 and 83 reading. It's very overbought. So that looks good if you're in the short camp. You have the VIX. VIX has the same pattern here as you see on the histogram. The VIX was going down as the market went up, and you have the reversal pattern on the histogram, and you have a very oversold VIX, but the stochastic is starting to turn. It's still 15 and 12 reading, so it has a lot of room to go on the upside. You did break down out of this pattern. You made a lower low here, as you see. You hit 30.16 versus 30.81 on those 2 bounces, but it's a very marginal lower low, and I think it's just because that rally was the bear rally, and I think it's topped. I think that's it for the rally. I think it's over. Bear rallies typically end, and they end sharp and suddenly, and then you have the next leg down can sometimes happen pretty swiftly, which I think is going to happen as you have all the bad news rolling out from the Eurozone. Looks like Greece is heading towards a collapse as their 2-year bonds traded at about 47%, and they can't seem to come up with an agreement over there. And there's rumors of Italy, being put back under the microscope over there. And there's just a lot of problems with that, and obviously the slowing economy over here. And there's been a lot of hype. The reason why I was shorting the retailers like Target is I usually play with the SPY when I play with options, but just because it's liquid. But I decided to take on Target just because I think it's going to outperform SPY on the way down, and it has these the last week and a half since I've opened the position, because I opened it when it was trading in the 50 to 51.50 area, and now it's 49.71, even though the SPY is actually higher than where it was when I initially shorted it. And here's the target chart here. This is the hourly Target on the daily, as you see here, had a rising. This is a rising wedge pattern, and basically you were going up into this wedge on light volume, as you can see here, and eventually it broke down on heavy volume. As you see, when it tried to break out here, there was high volume and it was an up day, but there was clearly selling into it. Then it tried to pop on the same store sales news, and it gapped up and it just sold down really hard for the rest of the day, and then it followed through on Friday with more downside. Basically, my theory on the fundamentals on these retailers is, I mean, they're getting really hyped up. I mean, somebody store with Target, they said that their same store sales were up 4%, but I mean, unless if you believe the government's inflation numbers that say that inflation is at 2%, 4% is actually probably much lower than what actual inflation is. I've heard inflation figures being estimated somewhere in the range of 10 to 15%, and I think that's much more accurate than 2%. So basically, if they're growing at their sales at 4%, and then they Target also had another thing. If you look at their last quarter's earnings, there was hype on that, and that was this pop over here at 52.26. They beat the earnings, but if you took out the over $100 million reduction in bad debt expense, they would have actually missed earnings. So that, you know, as you and the technicals don't lie. As you see here, it did the same thing. It gapped up to this 52.26 area, and it was just selling all day long. So yes, it was an up day, but it's, you know, people were obviously, it's called a pump and dump. You pump it up, you say, yeah, it's great earnings, everything's great, and then you're just selling into it all day long. And then yeah, it managed to grind a little higher, but eventually, as it tested that area again, the sellers just smacked it down. So I'm thinking that this is going to have a nice whipsaw effect this week. The technicals are setting up that way. It also, that area where it got sent back was a key area because it's a 200-day moving average, and it got sent back there on pretty good volume. As you see here, the histogram is been ticking down here. You got the stochastic 67 to 77 readings, obviously putting in a lower high here in the stochastic if you compare it back to July. And the next move down, I think, is going to break this 45 area, and it's going to send this into the 30s. And expect that to happen pretty shortly. As you see here, if you have another down day, you also might have the power of the 18 crossing back below the 50, and that should be able to give this some more downside momentum too. Is basically all these longs that bought into this hype of that retail is the place to be are going to be smacking out, and there's going to be, when you have that whipsaw effect, you can have some very violent moves because you have a lot of people that were scammed, and they're going to realize that at some point, probably in the next week or so, as the stock continues to decline, and the realization is there that 52.25 is not going to be eclipsed anytime soon. As you look at the weekly chart on this too, as you see here, yeah, it's been chopping around a range of 45 to 52. You could make an argument that you have a long-term bearish head and shoulders formation where you have the left shoulder at, you know, say 57, the head at 60 and 31 cents, and the right shoulder is forming there at around 52. Neckline would be around like in the 45 area, and you got the MACD is below zero, even though it's crossed up. But if it crosses back down, which makes sense with the economy going into a recession, this recession is going to be pretty nasty if it wants to, you know, which I anticipate. When you have the stochastic that turned up, but the momentum was sold into, so that could be very bearish. As this turns back down, you could have that whipsaw effect. And believe me, if a stock like Target is tanking, because they are actually one of the more solid retailers. Just I'm bearish on retail as a whole, and this stock has been pumped up like crazy over the last couple weeks, and obviously on really bad news, or you know, like they're hanging in there. I mean, it's I don't know why it was hyped up so much. You have same store sales growth 4% when inflation is over double that. It just doesn't make any sense. This is part one. I'm going to do part two next.